All right. Hi, everyone. It is 5 o'clock. We are starting now. Welcome to tonight's event. The prior event, I think it was 2 weeks ago tonight. I've been doing them about every other week. 2 weeks ago, on an email that went out like this afternoon before the event, I believe that I had added a little note saying, hey, this is probably one of the more boring events 2 weeks ago. I like to let you know that. It's unfortunate, though, that in truth, the more boring events are actually the most important ones for people. It goes back to the old thing when we used, well, back when, gosh, I haven't been to a financial show in years. The guy in an auditorium talking about, they really knew what he was talking about the things that would really make you money, about some discipline and psychological things, that room would be empty. And the guy that's selling the, hot new indicator that you clamp onto your computer and it makes you money hand over fist, that room, of course, is packed. And that was always backwards. It was kind of like that last week. I knew that last week I felt for a lot of people that might be kind of boring. I get comments then afterwards, though, saying that no, actually, that was great. So you never know. But I know this week is going to be one that's going to be not boring because it's really all charts. It's all about patterns. It's all about directly making money. It doesn't mean it's always easy to understand what I'm saying, but it's, I think, a topic that everybody likes a lot more. So that's why the email today, I believe, had a little note from me saying, hey, you're going to like this one. And I think you will. Don't leave early because there's going to be a lot of questions asked and they're really not going to get answered until the very end. So you're kind of forced to hang around. Not that I really care if you do or not. So hang around to the end and we'll go into that. Wow, I was listening. I turned on the news after the market closed and while I was finishing up these slides. And boy, I heard some really high powered people with some incredible advice. I'm going to share this with you because you may not have heard it. That the economy recovery may be heavily influenced by how well the virus is contained, and the virus containment may be heavily influenced by how well the vaccines work. I mean, I was just, wow. I was like, where do these people come up with this stuff? I mean, that's very awe-inspiring. That was very insightful to hear that, and it was a good thing we had multiple news conferences to determine that. That was great. Yeah, it was. So I've got this all figured out now. So I now know how to make money for the rest of the year. I was a little confused until now, but I've got it figured out. So let's move on as we have several other things to get into here. I had to say that. I want to make a comment before I go through tonight because I never want to be disingenuous and I never want to offend anybody. I'm trying to show you things that I think the majority of you will appreciate at some level. And when I say the majority of you, I assume the average person listening to me, average, is probably somebody who's been playing in the market for a while and not very happy with where they are. Now, that's not true for everybody. Some of you here are very successful. I know some of your names. You're in the room with me. And some of you are here because you love hearing me talk. I know you tell me all the time. And some of you are here because you want to pick up a few tidbits. And some of you are maybe brand new. I know there's a lot of new people at DTS and the free members over the holidays. And you're wondering what the heck I have to say. But I'm going to go over a bunch of trades. And as I do this, I understand, and I'll be the first to tell you, there's a lot of different ways to make money. So I don't ever want to offend anybody and say, gee, this is the way you have to do it. But I want to show you what I think are the most common mistakes that a lot of people make. Does that make sense, everyone? So I don't want to be gloaty and braggy, and I don't want to be condescending. I just want to share with you what I think. I've been teaching people a long time, and I have a pretty good sense of what they get right and what they get wrong. And some of you are beyond this, and some of you won't even come up to be able to understand it. But I think it's a good point for all of us. And as I show you these trades, I also, whenever I do an event like this, I always take trades from the last 3 to 5 trading days. I don't go back to 1942 on a warm summer's evening when this great trade happened. I just take the recent stuff, and that could get me in trouble because if I had a bad couple of days, it would really be a boring presentation. But so as I show you these, I mean, yes, I have losing trades. Everybody does. As a matter of fact, there's something wrong with you if you don't. You're not trading properly. You're probably not even you're probably not even making any kind of living if you don't have a losing trade. But just so you know, I mean, the last week I was 1.5 times my goal. This week I'm already over my goal. So I just want to make it clear that as I'm showing you winning trades, I'm not trying to cherry pick some stuff to show off. I'm just simply showing you examples of what I want to do tonight. And yes, there are some losers in there, but net, very profitable weeks. So I just want to make that clear so, nobody gets the wrong impression of what I'm doing here. Let's begin. You saw this slide. I'm not going to read it to you. That was sent to you, or the wording you've seen, or you have seen it if you wanted to. Let's go right to here. A couple of introductory slides, and we're going to go right to some charts and give you a lot of input from you guys tonight, probably. The title of tonight says patterns, right? What patterns do you trade? So that immediately implies that we're looking at charts, correct? At least that's the only pattern I would imagine that you would be thinking about. So the starting point of failure here, I'm going to keep repeating because I want you to follow with me here. This is the starting point of failure. And tonight we're talking about failure in trading/investing. When I say the word trading, I consider trading to be day trading, long-term trading, throw swing trading in there in the middle if you want to. I call it all trading. So trading, investing. The starting point of failure is not even knowing what to look at. In other words, so many people come to the market and they have this question, as if it's even a question. Gee, should I be looking up fundamentals and news and doing research, or should I look at this thing called technical analysis? There is no discussion at all about what you should be looking at. The starting point of failure is not even knowing what to look at. So we search for the truth all the time when we start, and that truth simply means that we are going to be looking at charts, period. There is no discussion about this. It's not a blend. It's not a blend of charts and fundamentals. Fundamentals are worthless. And now tonight's not about that. I'm not going to go into that. If you want to hear more or argue with me, attend one of the Introduction to Mastering Technical Analysis classes that you all can attend. I invite everybody to that. So feel free to do that. But I want to make it clear that there is only one thing that we look at to make money, and that's a chart. It is where the truth is. You may get fooled into thinking that fundamentals or news or whatever else does works. And also, again, tonight, I don't want to get into that. So I'm going to continue on. I just want to make it clear that what we're talking about is chart patterns. That's where the money is, period. If you have not come to that conclusion, you will at some point. The second point of failure, and this is, I think, the big one, that is what I'm really addressing tonight, and hopefully everyone here will benefit to some degree. The second point of failure is to try to learn charts and come up short, often way short. There is no one way to make money. There are many, but they are all variations of one theme, knowing how to really read a chart. I call it the language of charts. That's what tonight is all about. Notice the words coming up short. That's what I want to talk about for a minute here. Coming up short is what a lot of people do. And unfortunately, when they do that, they immediately say, well, nobody can make money in the market, which of course is just a stupid comment. Or they say that technical analysis just doesn't work because they don't want to either understand it, put in the time, or admit that they had a failure of some kind. Some things are just wrong, right? When I teach charts, you've heard me, I said this last week and I say that in several events, that when you're trying to understand technical analysis, there are things that are just wrong if you're doing them. If you're doing research or fundamental stuff, it's just wrong. There's a lot of things on a chart that are just wrong. But more important, a lot of things are not wrong, they're just woefully incomplete. This is likely the issue most of you are having if you're having an issue. And that's what I tried to say earlier. If you're having an issue right now, you're probably right in this category. It's not that what you necessarily have looked at is wrong. It's not like if you sent this to me and said, Paul, here's what somebody said support was, blah, blah, blah. I probably wouldn't say it's wrong. I would say that is just such an inadequate definition, you can't make money from that. Does that make sense, everybody, what I'm saying so far? And maybe some of you have felt this next line right here, which says, it seems right, you know it works, but you can't make it work for some reason, right? And I assume you don't have to volunteer, but I assume many of you have been there or are kind of there right now. And you're maybe in a thing called break-evensville, where you've been at this forever and the best you've done is get up to break even. There's a lot of reasons why you could be there. I've discussed that in a lot of the other videos I do. But I want you to think about something here that maybe helps put it in perspective a little bit. And this is the topic, very simply, of this, to me, one of the biggest reasons for failure, which is to just not have the proper really, in the event called the three-legged stool, which is earlier, 2, 3 months ago, I talk about the fact that you have to learn three concepts to make money at charts. And the first concept is to really master technical analysis, not just kind of know it and not just have a vague impression of what it is, but to really master. If this is how you want to make money, if this is what you want to do for a living, or if this is going to be your part-time job, or if you're going to be the person managing your long-term assets, you need to really master it. And you know what? Mastering charts is not hard. It's not like mastering being a neurosurgeon. It's not like mastering rocket science. It is relatively simple. What it takes is a little bit of dedication and getting the proper understanding and learning. Think about this for a minute. If you want to be a doctor, you decide that a friend of yours needs an operation. So all weekend long, you read all the information you can about that operation. Would you be successful in your friend's operation? Would you be successful taking out his appendix or kidney or whatever on Monday? Well, of course you wouldn't. Does that mean that what you read was wrong, though, everybody? It's kind of an obvious answer, but I need a sip of my coffee. Does that mean that what you read was wrong? No. It's just not only woefully incomplete, but number one, you probably didn't really learn what you read, right? I mean, if you're not apprised of the topic, like I always say, if I went to a lecture on string theory, I mean, I wouldn't even know what I don't know. I couldn't even begin to understand it, even if you're a genius. And there's no way that you read all there is to know to handle every single situation, right? And you also didn't instantly develop the instinct, the skill, or the seasoning of a professional doctor, right? Well, listen to this next one. I want you to really think about this too. I'm going to make a comment here. Doctors have it super, super simple. No offense if you're a doctor. I'm not trying to, but if you hear me out here, you'll understand what I'm saying. But was I a slide behind? Oh, okay. Well, what do you mean? What you read wasn't wrong. Some of it might have been wrong, but most of it is just an overview. It's not. If you want to really freak out, consider this. Here's where I wanted to go. If you wanted to operate, what if you went to operate as the doctor, and as you asked the nurse for a tool, it changed? What if you asked for a scalpel and she handed you something that looked like a hatchet? And you said, well, what are you doing? And she said, well, that's the scalpel today. They changed the rules. What do you mean they changed the rules? I can't use this. What if she hands you the next tool and it's rusty? You say, wait, I can't use a rusty tool. And she said, well, nobody cleaned them last week. And then you open up the patient, and what if the organs were all rearranged? The heart was down in the leg, the lungs were up in the brain. Now, you may say that's really, really a stupid, stupid, stupid thing to say, right? But isn't that what it's like as a trader? Seriously, those of you that have been trading, isn't that kind of what it's like as a trader? We experience something new every day, right? We don't know what's going to happen. We don't have this game plan where, okay, the market's going to rally to 326.20, then it's going to pull back 13%. We don't know what's going to happen. Every day is a new day for us, and the tools we used yesterday may not even be appropriate for today, right? When you think about it that way, I mean, being a doctor is fairly simple. You know exactly what to do at some point. Nothing ever changes. Everything's where it's supposed to be. And sure, there's the occasional fluke that happens, but 99% of the time, it's all textbook stuff, right? For a trader, it's never textbook, right? You guys in the room with me, right? What do we do every morning for 30 minutes? I mean, I spend an hour before that preparing. And then for 30 minutes, right, we're cranking through these lists and trying to find the right tool to use on that particular day, right? Reevaluating charts. But the goal of it is, what's the tool to use today, right? Long, short, quick little hit short, all day short. Today was like all day short. Today was, let's get some shorts, all day long short, right? Never textbook, but yeah, I got it right. Exactly. So I just want to throw that out there that, if you're trying to learn this, that's great, but you have to learn it. So let me go through some of the most common problems you may be having. Now, I'm going to go through 4 trades. So here's the fun part. Simple, same as trader. If doctors do not learn and continue learning, right. Right, Carlos. I agree. And I said, I'm not trying to in any way take away from what a doctor does. You understand that, I think, right? I'm just simply saying that For a trader, every day is a new day. Every experience is a new experience, right? So relatively speaking, I'm just trying to make the point that trading it could be arguably defined as being harder than being a doctor in some cases, right? That's all my point is really. Evaluate trade number one. Now this is from last Tuesday, and understand I don't normally go back. That's 6 days. It's an extra day. Sorry about that. Well, actually, I prepared most of this yesterday, so technically it was 5 days. But the point of was this was actually the trade of the week that I did, and the reason I'm putting in here is because this is what inspired this talk tonight. Some of these I have a list of presentations like the next 20. It's just I'm never sure which one to do or which one I want to hit on. And when I did this trade of the week, it hit me. This is what I have to focus on with people because I think it's one of the biggest mistakes, and it's also very timely because I think what I'm going to cover tonight, that some of you may, if you've had some success the last 2, 3 months, I don't want to take away from you, but I'm hoping that it's not because you develop bad habits that are going to end quickly and be a problem for you. This happened in years past. So let's go through this first trade. And we're going to evaluate it twice. So here is a 15-minute chart. And this is NNDM. You can barely read it there. And here's the concept. It gapped up. It had this tough resistance area. And that resistance area was the all-time high, right? The stock runs up and it then trades above the all-time high. Ding, ding, ding. Entry. Entry on Super Sync. The stock gapped up, stalled at resistance, stalled. See that first green bar? And then it took out that resistance for an entry. What a great entry. Notice also at the time it did that, it was taking out the all-time high in the daily chart. So what an entry, powerful stock, gapped up. And I uncovered the chart now, and that topping tail was the high for the day. It fell, so then we'd have to raise the stop to there, and it stops out for most of a loss. It failed to make a new high, raised my stop, and exited. Good call because it only fell from there. How does that sound as a trade to you? And I know it didn't work, but how does that sound? I entered on a bullish gap. It had cleared 2 trading days, and I was in a daily uptrend. They're the 20 and the 40, Craig. Not that that really matters right now, but so is there anything wrong with this trade? I mean, we're in this daily uptrend. You saw the daily chart. Get gapped over 2 days worth of trading. Yeah, but we cleared the resistance, Carlos. We cleared the resistance. That's when I entered. We stalled and then entered and boom. So look at this next slide. Was there anything really wrong with this trade? Well, everything that I said to justify that trade, you can find all over the place. As a matter of fact, the trade might have worked. It might have gone higher, right? But if this is what you do, a trade like this, and if you get really, really, really good at it, you will lose slowly. Did you hear what I just said? If this is what you do, which is all kind of textbook stuff, I mean, nobody could say what I did was wrong there. You may lose slowly. Many of you already know that. So let's take this and do a replay. What I actually did. I didn't really do that. I'm just kind of, playing the game here. Because that's what, as I did this, I realized that's what a lot of people could have been doing, right? So what did I actually do on this trade? Let's go back and take a look at that. Here's that 5-minute chart. It opened and I took it after it fell, right off the low. Entry over 1092. Entry down there. Well, Paul, how do you know to enter there? How do you know it's just not going to fall? Well, I'll answer that toward the end. Target 1, I took target 1 into the high of the day. Target 1 into the high of the day. Target 1 actually, if I would have sold the whole thing, would have made my daily goal. Target 2, I sold into that new high that everyone else was allegedly buying, or that at least maybe some people would be buying because it was a new high in an uptrend. Target 1, target 2. and ends up making twice the daily goal done by 10 o'clock. Now, the point of this is this, and it's going to be one of the themes tonight, is that you have to learn how to make money from what happens 90% of the time. And I hope this hits home with some of you what I'm saying right now. Most traders, especially newer traders, and especially this last 2-3 months, are trying to make money from what happens 10% of the time. In other words, they're looking for that huge move, that huge home run thing. Because when you get it, it feels pretty good. But you don't get it very often. As a new trader, you're probably not very good at even finding it, right? Now, does this make, now, I'm not asking you to say, oh, gee, I'm the person that does this, but does this make sense, everybody? Because even if you understood what I said and you said, oh, yeah, Paul, I'm with you totally, are you able to do that trade? In other words, it's easy to do it the way I did it the first time. Everybody kind of gets that, but it loses money most of the time because you're expecting the home run. What I'm doing is this stock was range bound. Does that make sense? So I bought the low and sold resistance. I didn't hope that that pop above resistance would make a home run. I assumed that pop above resistance would give me my selling opportunity, right? And by getting in the right moments, you don't have to have these huge moves. By getting in and share sizing properly and knowing when to get in and knowing where to put your stop, you can make great money playing just what things do 95% of the time. Guys, 95% of the time, stocks are just chopping around sideways, failing to go higher, failing to go lower. And if you're always playing that it's going to do that home run move, you're going to lose money most of the time. Make sense? Make your money on normal moves. That's the little note I had to myself here to say. Now, there's nothing wrong with the home run move, right? People in the room, I go for them sometimes. When do I go for them? When do I go for the home run move? Mark, I give you applause because that is a quick tip of the week that I out a long time ago. And I don't say that a whole lot, but you're right. When I don't need it, but mostly once I've kind of made maybe the last third I hold, like I'll show you the last trade I'm going to show you. Hold some for the home run. In other words, that should be the gravy. That should be the cherry on top, right? Yeah, that shouldn't be the basis of your trading, unless you are a very specialized, high reward to risk trader and you're successful at it. You know, if you go for the home runs, I actually think it's a very good style, as long as when you get the home run, you have to take it. You have to really ring the register, because if you're going to get 1 in 4 trades right, that fifth trade better make the money. And the problem with most people is when they get the home run, they don't actually take a home run. They just kind of walk away with some profits, right? When I'm not sure what you're saying there, Pablo, when you have price void and the daily bar is not extended. Oh, that's when you go for the home run. Okay, all right. All right. Trade number 2 from Thursday. So now I did this yesterday, so this is 3 trading days back. A downtrend runs into a tough minor resistance. I'm calling it a mattress area. You don't have to worry about what that means for now. Mini gap down the next day. So we're looking at this right here. This is a 15-minute chart. That when this gap down this day, felt that might be a decent short. So let's take a look at how it maybe played out. So it falls pretty quick, and I'm not real sure. And I've, understood, been told, taught that, either direction, you want to make sure the stock is definitely trending in your direction. And I'm looking at this move up, on the 5-minute chart, it's all up, 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 up. So I want to really make sure we break that trend. So I underneath A, if you look at a 1-minute chart, it had this consolidation. You see that? So shorting underneath the consolidation, underneath the breakdown on the 1-minute chart, and that ensured the stock was going to go lower. It dropped a little bit, and then I decided that I would trail part of this when it took out the high of that bar, which made a little bit of money. Not a lot, but a little bit. And then what happened next? C, stop the rest at break even. because, it's good to just be break even rather than to lose any money, right? So shorted there, covered some there, break even for the rest, made a little bit of money, maybe made a fifth of the day's profit. What do we think about it? Good trade? Did I do, you're not buying it, LOL, okay, but did I do anything wrong, Fire Tower? I mean, if I took this to the National Trade Association of America and other countries combined to the United Trading Association and presented this to them, would they take away my license to trade because I'm an idiot? No, they'd say, gee, you followed, you followed pretty much what you should be doing. It's just that, yeah, it didn't make any money, but that's all right. Just keep at it. You'll get it eventually. You ever hear that from somebody? You're completely doing the wrong thing, but you'll get it eventually. So you might have guessed you're going to see this slide again. If this is what you do and you get really good at it, you will lose slowly. You may already know that. Target was way below there, Justin. Target didn't even come into fruition. It just had to get out because it wasn't working. You will lose slowly. You already know that. So let's do a replay and let's take a look at what I actually did. What I actually did was shorted under 47.74 as soon as this thing ran up into here. Well, Paul, how do you know to just short that when it was heading up? How do you do that? Well, I'll explain that in a little bit. Stop over 42.80. Covered half. Wait a minute. I'm covering half where you were getting into it. Isn't that what we're doing here? Yeah, you're going to get used to this routine because there's four of these fire towers. Everybody will catch on by the third one, I think. Yeah, so this is what I actually did. So I actually covered half at that area that I said maybe that's where you learn to take the breakdown. So covered half there. And then see, covered the other half here. But guess what? There's a little bit of difference in the profit when you entered here and you're covering here. In other words, what was I doing, everybody? And there's the numbers from this. So well over the day's profit. Again, I don't try to trade quickly, but when you just happen to get it right, it all hits in 30 minutes, you're done. What's the concept here again? Shorting there and buying there. Entries make everything. That's a good part of the concept. Of course, the problem, Mike, is you have to know how to enter, right? Because somebody's going to say to me at some point, Paul, when I enter there, it just keeps going higher, right? Getting the normal move. Thank you, Eric. You ought to be like my sidekick because you always have the right guy. That's my point. This is just the normal. You go back and look at this chart. Guess what? It's just the normal move. It's just the normal fluctuation. You go back and look at this daily chart. It was no big deal. If I told you I played this daily chart, you'd go, did you? Oh, well, must have been boring. It was boring. Matter of fact, all of my trading is boring. As a matter of fact, if there's some people out there who just came to the market the last 3 months and they want to come to my trading room to get the exciting 700% moves that happen every day, they're going to just leave because I'm as boring as can be. Matter of fact, if it wasn't for my hysterical jokes in the trading room, people would be falling asleep probably. Oh, Eric, yeah, you were saying, both of you guys are saying the same thing. All right. So let's take a look at another example. Trade number 3. This is from Monday. Pay special attention to this one because this is a good one. Uptrending chart. Uptrending chart. Big breakout bar. We gap up in a big wide range bar. Now I understand. I mean, I'm not an expert at this, but I've been told that this is a bullish wide bar that is promoting bullish activity. So I didn't just jump on this anywhere. I'm smart. I waited for the pullback right there. Right? Right in there. So there's the little pullback buy set. You guys don't know what a buy setup is, right? So there's the little buy setup that I took. And what a great trade. Oh, wow. Holy smokes. That one kind of stung. I mean, I was barely in that and phew, just absolutely smoked me. Good thing I got out of that, right? That's what you have stops for. Guys, nothing I can do. I mean, that's what you have stops for. I did everything textbook. That is just a bullish setup. I did it all textbook, right? Boom. How does this sound? It was a losing trade, sure, but you can't get them all right. This is a sound trade, right? It just didn't work. Or did I miss something? Again, you could certainly argue this or have somebody who took this trade justify why they did it. Now, you're probably going to say I entered here, but you're wrong. In this case here, this is just the wrong direction. Now, obviously, this is on my screen this morning. No, David, because see, this is on the bearish side of my screen, and here's why. So here's one of those little things maybe people didn't look at. Oh, here's the same slide. You know, if you do this and you get really, really good at it, you're going to lose money. But you already know that, so let's take a look at what I actually did. Okay, so here's the point of what I actually did. Here is the parent time frame, the daily chart. Oh, the tail doesn't wag the dog. Now again, this is not meant to be an entire lesson on technical analysis. It's meant to be a guide to you as to what you have to kind of learn. This is a short. This is on my screen this day to short the rally, not to be long, right? In other words, it wasn't even a long. Why? Because the daily chart says it's not a long. So this one here, you're not going to see I got in long early. I shorted where that stop out was. Remember the stop out? Well, that was my entry short. So this wide range bar that you see is actually, in this case, not an igniting type bar to be bullish because of the daily chart. Go back. It's an ending type bar going into a daily resistance area. Whoops. So after this rallied up, I'm looking for the break of this, right? Now, what kind of confidence did I have that that was going to be a good short after this big green bar? Well, you may not even believe this, but I had, and by the way, for some of you that are newer, would you just give me a one if you're in the trading room with me, would you? Give me a one if you're in the trading room with me. A few of you people, okay. So just for like new people here, these people are in the room with me. And believe me, if I told a lie about something, they'd be all over my butt here. So I just want to let you know I'm not just pulling charts up and saying what I did and making it up. This is all done in the room, and some of these people traded these, right? Anybody who wanted to trade them, trade them. So how confident was I that this failure here would actually be a short? Well, I was so confident, you know what I did? I didn't even wait for that. I shorted right up in here. I shorted just as we started to roll off that top there. Now, this was a big sudden move. That part was lucky. I think something happened in the market right that day. That was Monday. Right? I think the market took a hit that day because somebody said something, whatever. So that part was lucky that it got the move really quick. But I have no doubt the stock would have bled. I think it would have taken all day to hit that target. So it fell really quick. And target number one was low of the day, taking half. And again, I call this free money. I don't think the low of the day had no support whatsoever. The low of the day in that situation is not a support area. The thing is, I got there in 5 minutes and it was a lot of money, and I call that free money. You take it. If it would have bled down there, throughout a half hour, I maybe would have waited longer, or 45 minutes. And then we puked. When you puke, you take it. When you accelerate in either direction as a day trader, well, on any time frame, when you accelerate, you take your money and you run. So there's the numbers on that one. If you want to look at your own chart, the entry is under 395.50 and stop over 399. Two targets. And again, about twice the day's goal on one trade. And that was over, well, when did that end? That was over, yeah, closer to noon. So that one didn't start till 10 and ended at 11:30, which is kind of more typical for what I normally am doing, something like that. One more? You want to do one more? The reason I put that there was because I was basically looking for the last one, and I added one from today at the last minute. So there's a great example from one from today. So here's today. This is hot off the press. This is Ford. And again, this is one of my favorite setups. Ford today. Now, Ford, everybody in the room with me, it's still on my screen. Hot list items on the long side, two things, right? Because this is right on my screen, so I didn't even take it out. Long with COF and ABT. I had to pick one because they were happening about the same time. I only wanted one long because I thought we were going to fall today. So I took the COF, made some money. Some of you took Abbott, right? And Abbott did great. And then on the short side, I had three things really. BA, Ford, and the market. So Ford turns out to be just a favorite trade for me. I don't get to see it every day. It's a be the tail under a mattress, right? Those of you in the seminar program, we just talked about this Saturday. Here's an example of it. I wish I saw this every single day. I don't. No question about the direction here, right? I'm not going to trick you here, right? This is a short. There's no question about it. We're in a 15-minute downtrend. We gapped under a base. Everything's downtrending. The only question is, where do you get in this? How do you get in? How do you know if it rallies? How do you know you short a rally? How do you know to do that? When do you wait for a breakdown? 5-minute chart. Well, I'm sitting here looking and saying, boy, you know what? That's really strong rallying back. I'm not so sure about that. I don't know what to do. I mean, I know I kind of like Ford short, but now it's rallying. And if it rallies, maybe it's going to keep rallying. I'm not sure what to do. Let me take a look at a smaller time frame. Oh, wow. Good thing I looked at the 1-minute chart because we came over this red bar and really a strong rally. I'm not really sure I want to get into that because that's Ford's been kind of strong on some days. It's probably just going to blow through that. So let me wait until we take out the low. Once we take out the low, for sure, this thing is going lower, no question about it. So get short there. And you know what? It's such a long distance to the high of the day. I need to increase my reward to risk, right? How do you increase your reward to risk? Well, I got in kind of late, so I'll just put the stop here. That'll help me out, right? So enter there, stop there, and boom, boom, boom. Oh, rats. He came up just enough to stop me out. Well, that's all right. You know, it's you can't get them all. It probably won't fall anyhow. Did I do anything wrong? No. I mean, I shorted a downtrending stock. I shorted it on weakness. I put my stop at a significant area and also put in a spot where I could make some money. It's pretty hard to scold me, but if that's how you trade and you get really, really good at it, you're going to lose money really slowly, right? Right, Jason. So that's what obviously I'm going to really be doing is, and actually, so I ended up shorting right there. You'll see the numbers in a second. It was at '09, I think it was. Yeah, at '09. Um, and to be honest with you, I consider that a bad entry even. Those of you with me in the room today, you know, I was trying to finagle I was trying to finagle up here. And Mike, it's not even a 3 candle reversal. I don't even care about that. Yeah, I was trying to get 15, 16 cents. Yeah, I was trying to get it right up in here. And I just kind of didn't get it. I was just missing it. I couldn't get the right number, and then it started to drop, so I ended up getting it at '09. So I'm just saying, I'm not even proud of this entry. And again, Mike, the moving, again, I don't want to battle with you, but if you're making comments, I assume you want some feedback. The moving averages are completely irrelevant here. They are completely irrelevant. Congestion is key. Congestion, Mike, that's the key word. As a matter of fact, I call this a mattress. It's a little fun name I have. It's not to promote curiosity. It's just a term I came up with. Go back to the main chart here. Where is it? This area is what I call a mattress. And it promotes a great deal of selling when you run up into it because of the way it sets up, right? Yeah, so moving averages are, when you gap down like that, the moving averages are just completely worthless. There's somebody may look at them, and I mean, it's no coincidence they happen to be there because that's where they are, but I mean, it's not because of those. Matter of fact, my eyes don't even see those. I like moving averages, Mike. I like Mike um, as a guide for trends, but they are completely irrelevant in many situations, such as this. So I just want to point that out for everybody listening. That had nothing to do with it. And actually, like I said, I would have. I really wanted to get short like 15 by 25 or something like that, but I didn't get it. So, anyways, I got short up there. You know what that means? That means I can take kind of a reasonable target at this support area. This is kind of a little bit of a support area. See how the stock stalled here? And that's because it puked lower and then came back up. So what's happening? So what I try and teach everybody is the language of charts. So that in any situation, just like being a doctor, you know, it's great if you know exactly how to do an appendix operation. That's great. But the reason doctors aren't trained in a 6-month tech school is because they have to be prepared for anything that could happen, right? Stuff happens. And for a trader, stuff happening is all the time. So I want to be able to understand what's going on. And what is happening, and the way you have to think of it is that there are people who shorted this opening bar, right? Mike, imagine you shorted the opening bar, right? And you take a sip of coffee and now you're up here. So all of a sudden you're underwater, right? So now you're thinking, okay, I got to buy this back some point. Where do you buy it back? Well, here you come down to your break even. This is where you're buying it back. So there is a support area here. And the way I would phrase it is, if for some reason Ford was not going to go lower this day, this is where it would have stalled. So I took a third there, just a third. I call it my get safe area. And then from there, it becomes easy. Am I on the right thing here? Yeah, I'm not on what I'm really doing here. Boom. So B becomes cover a third, and then we have the puke. Puke to C, cover a third. And then what was the last part supposed to be? Anybody in the room today? The last third of forward, what was the target? Somebody asked what targets were. EOD, end of day. End of day. Now, it doesn't mean I closed my eyes completely. I managed it. I probably lowered the stop 3 times, Eric, I think, throughout the afternoon, right? So every time, I lowered it to here initially, and then I lowered it to here, and then I got it down to here. And then I think in the closing minutes, I got it down some more and took it right to the end of the day. So the last third was like a 3R move on the last third. So here are all the numbers on Ford. Whoops. Oh, they're up top. There wasn't room on the bottom. So there are numbers on Ford, which is taken in thirds. And again, this was today. Almost got a week's profit today on four trades. So, it was a good day. But, yesterday I lost one. Couldn't find anything yesterday. I was even all day and I took one trade that lost. So let me see your comments here. So I wasn't looking at your comments. Let me take a quick look. Okay, Mike, true. Fire Tower, true, true. Ding, ding. I don't trade them ever. Okay, the moving average is right. Right, exactly, good. Yeah, they should never, they're not really support or resistance. They should never be entry concepts. Moving average crossing doesn't mean anything in the world, despite what somebody might tell you. So this is where you miss the mattress and well, in this case, yes. Well, in this case here, we hit the mattress, but it's kind of in a spaceship sort of sense because we came from underneath the mattress and ran up into it rather than from the top down. But you took short because that's what happens 95% of the time. Well, not lately, Mike. Lately, it's a little tougher to find the shorts unless you get it some momentum. Anything works with momentum these days. Fabio, great question. When do you manage in thirds instead of halves? It's kind of where I'm looking at in the chart, Fabio, is I'm trying to always, there's always targets on the chart somewhere, and sometimes the targets are very firm, so you don't have much of a choice. Sometimes it's unclear. I felt the market and Ford were going to have big drops today, so I wanted to carry the both to the end of the day. So what really makes up my mind most of the time is what levels the stock has to go through in order to get where I want it to go. So when I have a tough low of the day, if all I have is low of the day and then end of the day, I usually do halves. With Ford, because of the way it's set up, I felt I needed to take some off early. Initially, I said, boy, let's just let Ford go all end of the day. And then I got some other trades going and we did. So it really depends on the chart and whether you think you have 2 clean areas or if that first area may hang you up. Then I take a small amount in the first area and let the rest go. So it's not, I know there was a fuzzy answer because you have to really look at every chart and just kind of figure out what you're doing with it. But I think it's generally good. Once in a while, I'll try and just let something go and let the whole thing go. But generally, I'm always trying to take something off the table and then move on to another trade. Okay. Well, Jim, I think there's I don't quit. No, I think your goal should be to average making 1 hour a day. And there's a video about that I'd encourage you to watch because I think it's a huge topic. And it's called From Chart Reader to Trader Investor. And if you go on the free stuff page to get that, it's going to be on the archive page because it's from a while back. Here is, by the way, the free stuff page. And by the way, remember, we're coming to some good slides here, so hang on a minute here. There's the free stuff page. And if you haven't been there, hang out there a while. I mean, you'll hear a lot of, you'll have a lot of good things to look at in there. shorts should be all over the place. Well, Mark, it's not that simple to say. No, oftentimes after a big day down, you have a small retracement day or a sideways day. So it's not as simple as shorts all over the place. And besides that, Mark, I'm very much a individual pattern trader. So what I look for are individual stocks doing unique things. It's always a little more difficult if you're trying to back up and just say, what's the market doing? I like doing the market sometimes. Matter of fact, I almost did it today. But for the most part, I like to trade around a market bias using individual stocks. Like BA today, Ford, unique patterns. I know what they're doing. High odds type of stuff. That's what I like. Rather than the general comment, shorts all over tomorrow. Maybe. I don't know. I don't know where we're opening. Um, Got to see. I hear they're going to make it illegal to. Yeah, I know. Whatever. Yeah, to protect people. Yeah. No. What's funny? I always, as long as you brought that up, what I always question is, how come you're not? How come you are allowed to long squeeze? It's really no different. I mean, we talk about a short squeeze like something special because, oh, who's short stocks? But if you're long a stock and people start selling it, don't you have to say, isn't selling your long the same as buying your short? There's no difference. There's no difference at all. But for some reason, we just want to protect the market and always make sure it's going up. So yeah, exactly. Okay, so any questions on these charts at least? Again, let me just review what I said in the beginning here. My point here is trying to hit on what I think maybe can be a very difficult area for people where you get into this stage. And I get comments from people a lot of times, all the time in email. They listen to me talk or I answer and they say, man, it's like you're in my head. Has anybody ever said that to me listening? I've had that said to me 1,000 times. Paul, it's like you're in my head. Anybody ever said that to me? It's like you're in my head. You know just what I'm thinking. Well, it's because I do. I've been there. Everybody's been there. And there's this big time period where people get in this difficult situation where they kind of know charts and they know it well enough to get in a little bit of trouble and to, just kind of struggle along. And the theory is always that, oh, I'll be better next month. And you know what? I encourage people to be better next month. I encourage people to go ahead and learn it on your own. The free stuff page link I just gave you, I'm going to boldly say is the best page in the entire internet for learning to trade. It's not the biggest page. You can go to pages with tons of useless definitions that don't help you. But the examples on there and the lessons on there are the most professional things you can learn. So it is to me by far and away the most useful page you ever find on the internet, bar none, anywhere, period. You can find a lot of definitions that don't help you in a lot of sites that aren't even correct in many situations, right? Yeah, I wouldn't say tens of thousands, but I am well, and plus I'm familiar with it too because I went through it. I lived through it. I know exactly what the 99% of people are doing and what they're thinking. Hey, you know what? My first couple of months trading, I actually had to find out for myself that fundamentals are worthless. I wasn't sure. I didn't know. Nobody told me that. I had to go figure it out myself. But the problem comes down, folks, and this is the tough answer for a lot of you, is that how do you know to just short there? I mean, I'm showing you examples and it looks so easy. But then tomorrow, oh, the market's gapping down tomorrow and oh, FOMC said this and oh, the stock had earnings and oh, look at all these charts and oh, look at all this and oh, look at that. You know what I said to the room today? And I do this every other week or so, but it's especially important today. We were joking around some today because, GME is up 1,000% and what you call it's up. What is it today? I was trading the Nokia. I was in Nokia long today. If I would have held on to it through the halt, I would have had a 40-hour trade. Let me type that in case you didn't see it. A 40-hour trade. I didn't make 40 hours on it. It was a great trade and I was happy with it. But I don't, yeah, I don't ever want to be in something like that. I don't go after that. I didn't think Nokia was that. I didn't think it was that. It was just a normal stock. It just started taking off. I made a ton of money on it, but it did that. I don't like that stuff at all. I wasn't in it though. Yes, I was only in one halt in my whole life, and I wasn't in it though, Fire Tower. I wish I was. Yeah. So anyways, this whole guys. So people started talking about this in the room, and all these stocks, and they're up 5 million%, and stocks are gapping up 1 million%. And I had to stop and say, you know what, for my own benefit as well as anybody in the room, you know what, just okay, everybody, forget all this stuff. Here's the four stocks I'm looking at. I'm looking at COF, ABT, BA, and F. Four boring stocks. You know why I'm looking at them? Because I know what they're going to do. All this other crap, I have no idea what it's going to do. This is a once in a century event. Do you think anybody on planet Earth knew where GME is going today at 10 o'clock? Nobody. I don't care about any of that stuff. Yeah, Jeff is the one that suggested Nokia. Thank you, Jeff. Once in a while, a room member comes up with a pick, and I have to give him credit because I didn't have it on my list. The market was about to open. They hadn't seen it. It was a great setup. Yeah, it pains me sometimes to give any credit to anybody, but I had to do it. You'll get mentioned in the notes of the room tonight. Don't worry. So, so I had to stop and say, you know what? Clear your mind a minute, right? What's our job as a trader? And I don't care if you're long term or short term. What is your job, everybody? To make money and to do it in as boring and as safe a fashion as you possibly can. No, Justin, you are 100% wrong. Sorry, I have to harp on you for that because it's in seminars I do. Your job is not to not lose money. Because, Justin, if that is what you feel your job is, that is what you will do. You will do a great job just kind of not losing money, and you'll never make money. You need to know what you're doing, and you need to go make money. But you need to do it in a way that has the odds in your favor and where you do have your safety net where you're never going to get in trouble. But you need to make money. Do you understand that? You need to make money. From day one, when you learn to trade, you learn to make money. Not to minimize losses, not to try and be safe. You make money. Okay? Period. No, not both. There are times where, yes, it's appropriate to say, okay, let's move the stop up and maybe a partial loss on this, maybe minimize the loss, whatever it is. There's time, but it's the mental set I'm trying to get across. You cannot have that as your goal because that's what people have, Justin. I see it all the time. Their goal when they get into trade, Justin, from the second they're in it, is how can I minimize this loss? Do you understand what I'm saying? And that's what they're focused on, and that's what they do. They minimize all their losses. You got to have confidence and know what you're doing and go for the targets. I don't care about taking a stop. Let me put it this way too, Justin. I don't care about taking a stop. People in the room, I never get mad at a stop out. Defined by your risk amount, exactly. You start off with an extremely small risk amount, Justin. See, I teach people to trade as professionals right out of the gates. Day one, no baby steps. You come out, pedal to the metal, full-fledged trader. But you know what you're safe for? You're risking $5. That's it. You risk $5. You get confidence, you know what you're doing. If you learn it the other way, Justin, when do you ever change? I've worked with a lot of people. I've never seen anybody just change and go, okay, well, I've been protecting losses this whole time. I think I'll switch today. I mean, it just doesn't happen, right? It just doesn't happen. So you gain confidence by, and again, Justin, if you're new, there are several, you can probably find them just by the right title. There are several videos on the site that define these topics for you because this is all on the free stuff page, right? Purdue host, 35 years old when you missed the field in the right. Yeah, Mike. It's very true to me because I've seen it. I've just seen it time and time again. And so many people teach that. People on my side of the mic here, they teach that. They teach, oh, you got to be safe. You got to get your stop up really quick. You got to go to break even as soon as you can. It's all crap. It teaches you to be a losing trader. Don't like what I'm saying? That's fine. I don't care. But I teach people to make money, not to just survive for 3 years and then finally bleed out like you had 1,000 paper cuts, right? GME was a rash of short covering where everybody jumped on the boat, Mark. Because you should be saying, well, no matter where the stock started, if you shorted and then all the shorts cover, you're back to where you were. But it was this forced thing where as big funds had to get out, people were just jumping on the boat. It traded in 3 days, in 4 days, it traded 10 times its total share holdings. The total shares outstanding for GME It traded 4 times that number in the last 4 days. Ten, no, it traded 10 times that number in the last 4 days. But who cares? Could care less about GME. Doesn't make or lose me any money. Could care less. So, so the point that I was getting to is because I got to wrap this up here. As I was talking with Justin, I got distracted, but it's really all the same comment. Is that you have to kind of learn this. How do you know to short that? How do you know to be so aggressive to just short something that's running higher? When do you do that? I was taught, somebody taught me, you don't short a stock that's moving up. Well, yeah, you do. In the small time frame, you do. I make my money from catching people on the small time frame going the wrong direction when it conflicts with the big time frame. Big time frame heading lower, short time frame heading higher. You find where the junction is, you get aggressively short. Excuse me. There's lots of great things to learn along those lines. And the problem is, what did I even say here? Make your money on normal price moves. Most stocks, most of the time, are choppy, sideways, messy. Yes, there are some high flyers. Is that really the slide I had there? That's not so much what I wanted to say, really. Be as boring as possible. But how do you have to learn how to read a chart. So again, I have encouraged people to try and learn this on your own for several reasons. Some people are not ready to jump in and do this. They're just doing another job. They're trying to stick their toes in. Free stuff page. Go learn all you can there. Some people are ready to go and they're saying, you know what? I'm going to learn this on my own. I can do it. I said that. That's why I respect that. I said that many, many years ago. I'm a smart guy. I'll figure this out. I didn't figure it out. So try it on your own. And the reason I really promote that, and I'm not trying to be tongue in cheek or hypocritical at all, because I think the best student is somebody who does try and says, you know what, I just can't figure it out. And I think theoretically some people can make it, but I know it's a fairly low percentage. But a lot of people just aren't ready to jump in yet. So go to the free stuff page. I am available to help people, even if you're just a free member. I reply to emails. I'll evaluate trades for you if you want. I'll even get on the phone and talk to you if you want. Whatever it is, I'm here to try and help you guys. I have a lot of free time. I'm having a fun time in my life. I have, for the most part, lots of time, and the afternoons, I just trade the morning for the most part, right? We've been done at 10:30 every day for the last 2 weeks, except for one trade or two trades or something. And I don't think those trades made money anyhow. So for what it's worth, taking the classes were, oh, thanks, Richard. Yeah, Richard recently through the class in the room, and he's killing it. You just had a day that I think is better than any day I've ever had. Well, better than any day I've had in months, anyhow. So you just had a great day. Nice job. Learning curve is steep, can be very expensive. Yeah. Oh, you mean learning on your own? The market charges a high price. Yeah. But sometimes Fire Tower, you have to pay a little bit, to get mad and dig your heels in. I always think back to that Market Wizard story. Market Wizards by Jack Schwager, where you interview 25 successful traders and trying to find out what they have in common. They're all technical traders, of course. And he tried to find out what they had in common technically. And he found out that technically they had nothing in common. There were two things they did have in common. One of those two things was that all 25 of those traders had lost a lot of money, more than half their account, before they got mad and they dug in and they either got help or figured out what to do or just got the discipline down if they knew what to do. They all had to go through that learning curve. So for a lot of people, it is an important part of it. It's just part of the learning thing. And that's why I'm so big on just starting off very light, because you will feel the pain. Believe me, if you lose 20 trades in a row and you're down $100, it's just as mentally painful as being down $10,000, except you don't have the financial pain. But you will learn. You will. And I have a last minute note here too. I put it on kind of on this last slide. I probably have discussed this by now, but I haven't actually. I want to bring some up that I feel just an overwhelming obligation to do. And again, I do not want to offend anybody. I do not want anybody to say, gee, Paul, I'm having a great time. That's fine. I just want to give you some statistics. We're in crazy town right now. We are in absolute positive crazy town, actually way worse than 1999. And this whole event, this whole year has been a once in a century type of a event. And I have a lot of evidence. First time I said it, I think Crazy Town is coming to an end. And I just want you all to be very, very, very careful out there if you're out there on your own. There are going to be a lot of really bad stories coming up. It happened in 2000. I want you to remember the statistic. In 2001, the #1 online brokerage account was E-Trade. And by the end of 2001, 97% of their accounts were broke. And I want you to remember that. We're in an era of Robinhood, and we're in an era of crazy town, what you're seeing today. And there are even going to be, I think, some bigger financial institutions in trouble, all kinds of stuff going on. So be very careful. Do not be a permeable, and also don't get ahead of anything. Read a chart. Don't guess. Don't base your trading on what you think is happening in the news or politically. That's a guaranteed way to lose money because the market is always ahead of things. Just like those guys who hadn't taken off in GM. Yeah, I don't know. I mean, boy, that's got to be really, really painful. All right. And last couple of things here, real quick. I know a lot of you are newer that are here tonight. And if you are, I gave you the link to the free stuff page, and there's a lot of videos there. And some of you may go, my God. Here's two to start with just for fun. These are two of my recent favorites. They're on the screen in the last couple, 3 months. 3 parts to every strategy from 2011, 18. And Saturday Coffee, the last Saturday Coffee at DTS. We'll have another one after this seminar thing here. So there's some good ones for you to start with, and after that, just go through and pick the titles you like, or look at them all. I had somebody told me they looked at every video over 3 weekends or something. So great. For those of you who, and by the way, those of you who have a little time free, I really encourage you to begin the concept of day trading with just a couple days free a week or whatever you can, and to hop in there. Do not have the goal of quitting your job and becoming a day trader all in one weekend because it's not the way it works unless you have money set aside for a while, then that's fine. But come join us in the room if you'd like to. You can see all these trades I'm showing you here. This is stuff we do in the room. You can just hop on over to the services page. I'm just going to give you the services page here, and you can look through there. But there's an explanation of the room and a really good explanation. Actually, it's a great one-page thing, and if you want to, you can take a trial there. Here's the room thing. So feel free to do that. And if you're interested in day trading, but you don't have the liquid cash, because day trading requires a $25,000 account, this slide here is the ability to do that. It's called prop trading, and it gives people the ability to take $5,000 and trade it as 50. It's called just your risk money, and you can trade in and out like as if you had that money. It's not your money, of course, but you get to trade $50,000 worth of equity on 5,000, 10-to-1 ratio. You keep 95% of your profits. And this is not done through me. I am not part of this. I want to make that clear. It's a service from me to you. This is a place that I've used for years, 100% approval rating. The guys there are great. If you're interested, email me and I'll send you information about them. And again, this would be, and I don't want anybody to get into day trading that doesn't have money because that's a bad thing to do. But if you have money and it's in long-term accounts in your house and whatever, and you feel it appropriate to use this, then use this, okay? Carlos, I would want you to email me and let me send you, and if you already got the info, ask Richard about that stuff because there sometimes can be a difference for higher volume traders or experience, and I don't want to misquote what he's at right now because again, I don't do that part of it. I just want to have people that want to day trade, join us in the room, come get a prop account and come join us, okay? Thanks, Fire Tower. Get back in the room, would you? We miss you in there. Questions. Which coffee time date was the one you? Oh, the last one, Carmen. When you go to the site, the last one that's called Coffee at DTS. I thought it was a good one. Okay. Check out the three-legged stool too. That's another video if you haven't seen that event from the last quarter of last year, I think it was. I think a very important one. All right, guys. If you have any questions, always feel free to email me. I gave you my email up there. Some of you hop on into the room if you get a chance and check it out. If you have any curiosity about day trading, you may like the style there. I am not about scalping or hyperactivity. I like to get the job done the opening hour, maybe leave some potential home runs open for the day. And I don't sit there all day. I don't think that's a good style to do for anybody really. So, any more questions? If not, everybody, hope you enjoyed tonight, and we will see you all at our next free event, which is probably a week from Monday. Have a good one, guys.